Tuesday, November 7th, 2023, Maneco 64, home of alternative economics and contrarian views. So it looks like my channel is not as alternative and as contrarian as it used to be when I started it out, because Larry Fink, the CEO of the biggest fund manager in the world, they manage almost $10 trillion, is warning about inflation. And if you think inflation is over, think again. And I will have to agree with Larry Fink on this one. He's woken up to the fact of what inflation really is. Inflation isn't rising prices. And that's what we're going to look at today. I'm going to play you a few clips of Larry Fink talking about it. But before I do, let's go back to the definition of inflation. And this is what I've been harping on about, well, much longer than since 2015 when I started this channel. Even before that, when I learned about it back in the early 2000s, I learned that inflation is not caused by higher oil prices or higher prices of anything. Those are just the consequence of inflation. But unfortunately, like everything in our society, things have been twisted, not just in finance and economics, but in other areas of life and of science or whatever you want to, politics, social norms and everything. But that's a topic for another video. But I always like to refer back to my Merriam-Webster dictionary. It's from the 70s, early 70s, a pocketbook dictionary. It used to be my father's, and I kept it. And it says here, under inflation, the first definition, of course, is an act of inflating, the state of being inflated. Empty pretentiousness, pomposity. And number 3, that's the one that matters. An abnormal increase in the volume of money and credit, resulting in a substantial and continuing rise in the general price level. And even before the 70s, back maybe in the 40s and 50s, when you used the term inflation, it meant to be in the context of inflating the currency. That's what it means. You inflate the currency quicker than the economy can keep up, and you debase the currency because there's too many currency units chasing not enough goods and services. And even Ernest Hemingway said that the first symptom of a mismanaged society is the inflation of the currency, or the first panacea, he said, of a mismanaged society is inflating the currency, thinking that you could make things better, and it only leads to currency debasement and what we call today inflation, but it's really rising prices. And I said in the beginning of the video that inflation is anything but over. And what do I mean by that? Well, I mean that the currency is going to continue to be debased, and that the central bankers actually have very little intention of debasing it. And why is that? Well, because we are in a debt-based monetary system, and the powers that be, governments, central banks, they've inflated the system so much that the only way to keep it going is to keep inflating it. Because if you don't, everything implodes. So it's not surprising that the head economist of the Bank of England is already saying that they could cut rates next year, even though the rate of CPI is still almost at 7%, and the Bank of England interest rate is only around 5.25%. If the Bank of England and its top economists wanted really to quell inflation, they would have to raise rates a lot higher. The rate of interest would have to be higher than the debasement of the currency, which is reflected in the CPI. So we would need probably 12 to 15% interest rates, but they can't do that, as I said, because it's a debt-based system, and you destroy all the debt, and the economy goes into a Great Depression to the power of 10. So the Bank of England is going to inflate right back. And why is Larry Fink now waking up to this? Well, because they've abused it too much that they've lost control of it. So Larry Fink, managing 10 trillion of people's money, he's woken up to that. And we're going to come to Larry Fink in a minute. So there you go, Bank of England. Their excuse is that it's too dangerous for the Bank of England to let the CPI go below 2%. So basically he's saying, oh, we don't want you to go shopping and things not to be going up more than less than 2%. I mean, it's just intellectually empty and ridiculous what the Bank of England is saying. And that's why I'm telling you, you haven't seen anything yet. This is just an appetizer of what we've seen in the last 2 years. Unfortunately, the currency is going to continue to be debased. Things are going to get more and more unaffordable. And it could snowball. And what I mean by that? Well, it could mean that people realize it, like Larry Fink is realizing it. And you can bet that pretty soon, even CNBC and Bloomberg are going to realize it. And that's why I said I'm becoming less and less alternative and contrarian, because people are waking up to it. And when people do, they're going to start spending because, and that's going to make it worse. That's going to put more pressure on the currency. And how does that happen? Well, the demand for the currency will drop. When the demand for the currency drops, the currency goes down in value. And what does that mean, the demand? Well, when you earn the currency, you want to get rid of it because you know that things are going to get more expensive. And the same thing goes for investments. And that's why I continue to emphasize that physical investments, commodities, hard assets are going to do very well still, no matter what the short-term movements are. Because, for example, Larry Fink manages 10 trillion, BlackRock, and investors in the US at least, they only own 0.5% of their assets in gold. Commodities is a bit higher, but not much. But with the inflation, with Larry Fink saying he expects even the Fed by 2025 to have to raise rates again, bonds and stocks are going to have a very tough time. It's not even a matter of having a crash in financial assets. It's just a matter of investors moving to protect themselves, going into hard assets. So on a relative basis, hard assets are going to continue to do a lot better. So let's listen to Larry Fink. I got this actually from TikTok. Bloomberg Business has a TikTok account. And I bet you this speech he made here, or this talk, was to very top level clients, and it wasn't to a mom and pop conference, that's for sure. But I'm here to wake you up to the fact that even Larry Fink is he's aware of what's going on. So let's play the clip here.
We've had a government, I'm talking about the US now, that in 2000 we had an $8 trillion deficit. And today we have a $33 trillion deficit. So the deficit's grown by more than $1 trillion each year over the last 23 years. That is highly inflationary. The balance sheet of the Federal Reserve is highly inflationary. The amount of fiscal stimulus that is just entering the economy, which is very inflationary. The CHIPS Act, the IRA, and the Infrastructure Act, about $970 billion. The largest peacetime pandemic moment of fiscal stimulus. But I do believe the Federal Reserve is going to have to raise rates higher, which probably will mean by 25 we may have a soft, we may have a hard landing. That is the only way I see how we're going to be arresting this. But I don't expect it anytime soon.
So there you go. Sounded almost like he's been watching Monaco 64. So with that now, let's quickly look at where the markets are this morning. Rudy and I a little earlier today. It's 8:06 a.m. London time. So we got spot gold at trading around 1970. It's down again. Short term, yeah, gold is correcting a little bit. It had a really big move since the end of September, beginning of October. Longer term, though, it still looks very good, in my opinion, technically. If you look at the monthly chart, last month was an outside month, which meant that it made October, we saw a lower low from September, but then we closed above the high of September, and we made a new high. So that's an outside month. That's very bullish in the longer term. So yeah, that's how I see it. So right now, yeah, the high overnight has been 1979 and the low 1967. Silver, silver is just gold's little brother or sister, and eventually it's gonna make gold look tame. Right now, though, it's still under pressure. We're down 30 cents at 22.74. High's been 23.09, and the low's been right around here at 71. Dow futures is down 90 points. The Nasdaq is down 38. S&P is down 12. To the currencies, sterling is down 0.2 at 123.20. The euro is down about 0.2 as well, at just below 107, and the dollar is back above 150 versus the yen. We're at 150.44, up 0.25%, and the dollar is up a little bit versus the yuan at 729. Aussie dollar, that's down 1% at 64.28. The dollar is up 0.25% versus the Canadian dollar, 137.30. And the Kiwi dollar is down 2/3 at 59.21. To the commodities, WTI crude, that's down 1.7% at 79.40. Brent is down 1.7 as well at 83.80. High-grade copper is down 1%, just below 371. And what about platinum? Platinum is down as well. It's down about $8, just around 900. Let's quickly check bond yields. Yes, bond yields came off last week, so it gave the bond market a bit of a breather. And yeah, and the 10 years still pretty well under control. We're not back up to 5%, but having listened to Larry Fink, you should realize that this is not over by any stretch. If the Fed has to raise rates again eventually in a year or two, I bet this 10-year yield could go to 7 or 8 eventually. Of course, right now it's correcting, and we could see it go test like the 4.25%. Right now we're at 465. It's down 2 basis points. And don't forget, inflation is anything but over. They're going to keep inflating the currency. They haven't deflated the currency. Yes, we've seen money supply in the US come off, but it's still way above where it was pre-pandemic, as you can see by this chart. And you can bet that they're never going to bring it back below the levels that we had pre-2020. And that, my friends, that's inflation. And Larry Fink seems to have woken up to the fact. And I even think Jamie Dimon now realizes what inflation is too. So yeah, with that, I'm going to wish you all a very good day. Take care. Bye.